Are you using private real estate in your own investment portfolio? Let's talk about that.
This is Make Better Wealth Decisions, a podcast about financial blind spots, decision making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto.
Earlier last week, I had a conversation with Jason Jokia of Avenue Living, and we spoke about private real estate investment. And this is something that a lot of people never think of. They think of they will own a home, and there are a few people who might own a cottage or a rental property, but relatively few people think of buying real estate in a small chewable chunk in the form of a mutual fund or an exchange traded fund or an offering memorandum product, so they can put in $20,000 or $30,000 into their already diversified portfolio to add it to the stocks and bonds and other things that they already own as a diversifier and as a means of getting hopefully better risk adjusted returns. This is something that hedge funds do. This is especially something that foundations and that endowments and pension plans have been doing for generations, literally generations. And yet it's a relatively new thing in Canada to be doing things like that as a retail investor. So what do we gain? Well, first off, all asset classes have risks and returns, and real estate is no different. It's usually somewhere between stocks and bonds. Usually returns are lower than stocks, but higher than bonds, and the volatility is lower than stocks, but higher than bonds. That's usually, there are always going to be exceptions in both directions, and that's part of the point. You want to build a diversified portfolio with asset classes that zig when others zag so that you're not overly committed to one asset class or one type of investment in any given market cycle. Markets move through cycles, and if you're invested in different things that perform differently in those cycles, you can do a better job of smoothing out the glide path so that the highs are less high and the lows are less low. To my mind, real estate has been something that I've been using in my practice for a quarter of a century. And in particular, I think it's especially useful now in 2025 because we're looking at a situation where stock valuations are exceedingly high by historical standards. The cyclically adjusted price earnings ratio for the S&P 500 is in the mid 30s. That's about twice the historical average, which is another way of saying that if the US market, the S&P 500, were to drop by half, it would still be only fairly priced or normally priced or regularly priced based on historical valuations. Real estate prices, for all their problems, and there are a lot of people, especially here in Toronto where I live, where people will complain about prices being very high, are supported by strong fundamentals. We had over 1 million people come into Canada over the past year and a bit, and they need a place to live. And so supply and demand is such that you're almost certain to be able to have full occupancy if you're buying rental buildings, and you can make a lot of money by also refurbishing them and selling them down the road, supply and demand being what it is. It's also something that's extremely useful in an environment where there might be inflation. So historically, when financial assets, stocks and bonds do well is when inflation is low. When inflation starts to creep up, oftentimes it's real assets, sometimes called hard assets, that do better. That would mean possibly gold, but also precious metals, commodities, and yes, investment real estate. So if you want to find a way to make better wealth decisions, one thing that you ought to consider if you haven't done it yet is to put some private equity real estate or real estate in general into your investment portfolio in a judicious way so as to lower the risk, hopefully, maybe increase your returns, but be able to sleep better at night because your overall portfolio will be able to get you the returns you need without having too much risk along the way. And that, my friends, is what all people should look for as they make better wealth decisions.
This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.